Well, there is a lot of economic uncertainty in the financial world because of the COVID-19 pandemic. That is translated into a massive drop in mortgage rates. A drop in mortgage rates means the number of people applying to refinance their mortgage has been shooting up. So joining us now is Tendayi Kapfidze. Tendayi, you are the chief economist at LendingTree. And I want to talk about this because I think as soon as people heard about the Fed dropping the interest rate, they wondered whether or not they could benefit from that. Is this a good time to refinance your mortgage?
Yeah, absolutely. And, I think unfortunately with all this upheaval that's going on in our lives and in the economy, we're on defense on so many things. And this is actually one area where you can play offense. You can go get a refinance for your mortgage and potentially save a lot of money.
So if it's a good time to do it, what are the risks to refinancing right now? Are lenders going to be tougher?
Yeah, so the risk right now is that there's a lot of people actually trying to refinance because mortgage rates are close to their historic lows. So almost anybody who has ever gotten a mortgage could save money by getting a refinance. So a lot of people are jumping into it. So the challenge right now is that lenders don't quite have the capacity that they need to process all these mortgages, because of the volume coming in and, of course, because of disruptions to their own work process. So the biggest challenge is that you might wait a little bit longer to get your refinance, but I'll still go ahead and give it a try, because if you do get it, you're going to save potentially a lot of money.
I think people need to understand, too, that there are costs to refinancing, right? It's not sort of you just call them up and suddenly your monthly bill goes down. There's some upfront costs.
Yeah, so most times when you refinance, you do have to pay closing costs. And sometimes, there's a break even in terms of how long you're going to stay in the house, and whether it turns into savings or not. So because everybody's situation is different, I would encourage people to do is either go online and try out a couple of different calculators that will ask you questions about your particular situation and give you an idea of, whether or not you could potentially save money. And if you look at a calculator and you think you might save money, then it's time to go and talk to a lender.
So for homeowners who at the moment are facing some serious financial challenges during this pandemic, what are the options for existing mortgages?
Yeah, so a lot of people, of course, are seeing disruptions to their income. We saw just over the past 2 weeks that about 10 million people filed for jobless claims to get some unemployment benefit. So a lot of financial institutions and the government have created programs to help people through this time period. For mortgages in particular, you can get something called a forbearance, which essentially says that you don't have to make your monthly payment, but the payment is not canceled. You do have to make it at some later date, but you can get a forbearance for 3 months, 6 months, even up to 12 months. So what you do is if you've had a disruption in your income, just go ahead and call your lender and request a forbearance. Because of the volume of calls coming in right now, you don't even actually have to provide documentation if your mortgage is government backed. So it's a good option for people. And the great thing is, if you're even concerned about your income, just go ahead and get the forbearance, because that means that you're not obligated to make that payment. If you do still want to make the payment anyway, you always can, just like you can at any time pay an extra amount on your mortgage. So get a forbearance if you're concerned about your income.
All right, some really good advice there from Tendayi Kapfidze. Thank you very much. We appreciate it.
Thank you.
All right, we're going to take a quick break. We'll be right back.